Good afternoon, everyone. It's your mentor Vincent again. Welcome to ilearnhow. Today, I want to talk to you about a very, very important subject. Something that many people don't even touch. They don't want to talk about it, but that's exactly what the root cause of the problem is. So, many people are joining Forex every day. They're opening accounts, funding them, after getting a strategy, thinking that they're going to actually make some cash. We've seen everyone making some money. Our mentors here out there, they're buying some really super cars. And we all want to emulate that. We want to do it. But what happens? We lose the money, even with the strategy that they share with us. So today, I'm going to show you or tell you why this is actually happening to you, why you're not like them, why you actually think that forex or trading the market is a scam. So let's go into the video today and share the secrets.
Today we're going to look at the kind of mistakes that we make as traders, especially as beginners, and then end up blowing our accounts. We're going to look at what professional traders do versus what amateurs do. Basically, a step-by-step process and how you end up making your mistakes. This is a behavior thing. It's something that you do without being aware, but in this video I'm going to break it down so you are aware of how you do it and how you end up being in that situation that you always find yourself winning and end up finally losing your entire account. So after watching this lesson, I expect you to have learned this strategy and learned being aware basically of the behavior pattern that you actually go through, and then how to avoid it next time so you can start capitalizing on the good stuff that is left, which is following your own strategy. I've shared the strategy in 2 videos back, how to trade the market like a pro. So now I'm going to show you the mistakes that you do. I've chosen a part of the graph. Obviously, I already know what will happen, but I'm going to show you a step by step of what you usually do, things that you do without being aware. Without wasting time, let me start showing you what happens. Right now, we're looking at the price of Bitcoin at 5 minutes, and we can see that the market is currently pushing to the upside. So what we expect to see from here, we can see we have a strong support, resistance right here, where the market has actually bounced the top and then actually broke to the bottom and respected this. So you can see this level has been respected in the past, so we expect that in the future it should be respected once again. So now, if the market fails to break this resistance and go down, we'll be taking some sells, and if it actually push up, we'll take buys. So we're gonna go and play and see what the market does. Okay, it looks like the market is breaking up. Let's see if it closes. Okay, now the market shows that it's going to the upside. We're going to be taking a long, so we're long in this trade and putting our stop loss here and hoping to hit the target at the top right there. So now we're going to play and see if things will actually work in our favor. So now the market is going up like that, and we're happy that we're about to hit our target, and we're gonna be so happy and take our money. So now the market is starting to actually reverse, coming against us. Okay, maybe not. Let's see what happens. Okay, now the market is coming back. So what will happen in this regard is that we've been seeing profits, and then now all of a sudden our profits are becoming, oh, look at that, from here now coming to the bottom now here. So it looks like the market is actually going against me. So as a newbie, you'll be looking at this point and say, let me just take the money that I actually have right now and get away with it, right? So let's follow your strategy. Okay, right now here it is. The risk reward is 1-to-1 and we're taking the money. So we took the money at 1-to-1. Right, let me see. There you go. Our risk 50, and then we took profits at 80. It's 1-to-1. So we're still winning. It's okay. So let's see what the trade does. So the trade actually comes down and all right. And the trade start going back. Okay. Voila, look at that. The trade actually went ahead and take profit. So if you were a professional trader, you wouldn't have been threatened by the market reversing backwards. You'd have waited until you hit your take profit, and then now you see you now a professional trader took about 3.81. So this is now a newbie versus a professional trader. So this is you here, you, and now professional trader risked 50 and took profit at let's see, 7 times. So 100, 200, 300, and 50. Yeah. The trade has made around 50. Let's keep going. Let's see what happens again. If the market comes back to our level, we are taking another trade. Okay, we're seeing that the market has come to respect and come to this level. We'll be looking to actually take another trade. Let's see. Yeah, right there. So we're opening the second trade. So we'll remove this one for now. Let's see, remove. Now we're taking another trade, long, right? Yeah, we're taking another long, as we have seen. Now, hoping to hit the target here. Let's see what happens. Oh, things are going in our favor. We are currently killing it. Close to our targets. Whoa. Take profit. Oh, the market is coming back to the bottom again. And you know what happens? The same behavior as before. taking the money. The market's coming back, we're reversing. You are taking 1.5. So let's see. You are taking another 1.5. So 150. You win. Pro trader is holding. Pro trader, second trade. Hold. Okay. Until the target is hit. You took some 1.5. So let's see what happens. See, now we go. Pro trader hit top target hit. How much is this? 4.85. Pro trader 4.5. This time 450 on 4 times. Actually, this one is also wrong because that was 3.8. That means 3 times that is 1. So even here 1.5 is actually 775. So my math has been wrong. 75 here, 0.8 is actually 40. Only made 40 here. Now here is 3 point something, means that's 180, around 180. Yeah, that's 180. Return here, the pro trader made around 2. Okay, so now we're out. We remove this, then we're looking back again when the market is gonna come back to retest our level. Now I'll just go a little bit. Now we're entering again. We're expecting the same thing. The market actually just went a bit faster. We'll just go. We're taking a long again. Right here, we're expecting the market to go up. Do you know what you usually do? We play, the market goes down. So what usually happens is that when the market is busy going down, a newbie will start to increase this stop loss here because it's not comfortable losing. Just want to see the profit a bit and buying again. So a pro trader right here at the stop loss is out. So the pro trader already lost 50 here. This is now the that trade. That newbie hold. Pro trader opt out. You see, on the third trade. So now a newbie is basically in trouble right now. So the newbie ends up removing this, the stop loss and just making it even longer, hoping that everything will come back to the top. So what happens? The market keeps coming down. So now the newbie has lost hope, lost any confidence, and decided to close the trade. And now the newbie has lost how much? Let's look at the trade from the top going down. So the newbie is actually now, let's look at the risk reward here. Yeah, the newbie has lost 6 times. So now the newbie has lost loses 6 and the first trade the newbie made 40 and made 180, and the third trade loses 300. I think you are now familiar with this pattern. You have seen this happening before. You must have been familiar with this. So now, yes. So now the newbie decided, okay, I'm gonna go ahead and sell now. Let's remove this, and let's remove this one as well. And the newbie decided, oh, I'm going to sell now. I'm taking a shot. And the market definitely is going down, so I'm gonna put my stop loss here, and then take profit. Remember, I want to recover all my 300. Take profit must be even more. So let's see what happens. So the market is selling. Oh, the newbie is so happy, he's so excited, but the newbie is not happy with this, doesn't have a realistic target. So now the newbie is happy, is in profit. Newbie in profit, so happy, but the profit is not enough to cover the $300 that the newbie lost. So he's holding, hoping that the market will keep going down. So the market is now come at break even. The newbie is holding, is very scared at this point, and the market is currently just moving around, playing around with his emotions, like so. And then small profit, a bit of a loss. The newbie is scared. He's gonna stretch the stop loss a bit, because he nearly hit his stop loss right now. He's thinking the market will go down. Oh, the percent profit. Okay, back again to break even. All right. So let's speed things up. Okay. Let's see what happens. The newbie is very scared right now. Nearly hit his stop loss. Back in break even. Is in the red again. The newbie is out. Let's just say the newbie decided to increase to remove. Let's say to remove. Now I'm the newbie. I'm removing the stop loss, because now, you know what, I gave up. I'm in a desperate mode to make my $300. Oh my God. You see what happened to the newbie? Because now he was revenge trading. This is what we call revenge trading. After taking a loss, you quickly get into the market trying to recover your losses. Then you do revenge trading, and then it happens that the market will go to a direction for a short time, only to reverse backwards. And right now, if you look at this here, okay, this is where it is happen. There is even a bigger ratio to this side. Let's look at maybe a long. Look at a long, and just use this as take profit without a stop loss. Now the newbie lost 5 times. So 5 times, that is like 250. So basically the account is gone at this point. Account completely gone. And then that, my friend, is how money is lost. So let's look at this. And maybe lost 300 plus another trade where 550. So this 550 is now you add 180 plus 190, so it's 550 minus 180. It'll be like 350. Nubi is $350 rands down, or 3,500 down. So a little by little, if the account was 5,000, you're already sitting at 1,500, or the account is even gone, because most people fund with even less than that. So a professional trader always understands that losses are there, they are part of the game, and then you can lose at any time. So with a new person who's new to the market, they are not yet emotionally stable, therefore they do revenge trading a lot, and that's how you actually happen to lose a lot of money in the process. I hope this has benefited you somehow. Now you understand the kind of mistake that you make. So if I want to summarize what things that you should do and what you shouldn't do, is that don't move no matter what. No matter what. So don't revenge trade. Don't quickly trade. Trade after taking a loss. Analyze the market. Step back. So what else? Wait for the market to hit your stop loss or take profit. This is how professionals do it. Professionals always wait for the market to hit their stop loss or their take profit. Once they finish analyzing the market, they place their trade and they let go. It's done. You know that I'm going to lose 5% of the account and I'm willing to risk that money. So if it's wrong, then I'm okay with the loss, and then you take it that way. So a newbie does not do that. You will always move either the stop loss even further to lose more money, or you will cut your profits very quickly. So whatever, also don't cut your profits too soon. These are the rules. This is why you are losing. Basically, this is why you're losing. If you stop doing this, you'll start seeing money piling your accounts. Listen, if you follow this and you're still not making money, I will pay you back. There is no way. If you follow my strategy that I gave and you also let the market take you out and you let your profits run until it hits take profit and you're still not winning, I really don't know what to say, because that will not happen. You will always somehow break even, or you will be in profits after some time. Remember, this is a long game. You're not gonna try to make money and millions in a short time, like I said in the previous strategy. It's a step-by-step where you're building your account until it gets to where you want. It's a step-by-step process, guys. Let us learn this lesson. I hope many people have learned, and I don't have much to say for now, and the next video will be coming, guys, where I'll be analyzing the markets for next week. For now, I ask you to subscribe to this channel if you have not done so yet, so that you can receive new videos every time I make some new ones. And I look forward to see you on the next one. Bye bye.